Hello financial fans, welcome back to another stock analysis. Today we'll be covering Tyson Foods, stock ticker TSN. Tyson Foods is a prominent player in the farm products industry in the USA. The market cap currently is sitting at $21.6 billion. The revenue in 2022 was $53.28 billion. The dividend yield of Tyson Foods is currently sitting at 3.03%. Some of the brands that Tyson Foods owns include Bosco's, Jimmy Dean, Hillshire Farm, and Ballpark. These companies, as far as I know, are pretty popular in America, but here in Europe, in the Netherlands where I live, we don't have these products. Of the goods sold in 2022, 43% have been chicken products, 25% have been beef, 15% pork, 11% other prepared foods, and 6% other various products. To determine the value of this company, we'll be using a margin of safety that we'll be calculating and using at the end. Based on some financial ratios that we'll cover in a second, these will be determined. When we're using a scale of 4 colors, red will mean an increase to the margin of safety by 5%, orange will mean that there's no change, light green means that the margin of safety will be subtracted by 5%, and bright green means the margin of safety will be subtracted with 10%. When we're using 3 colors in a scale, red will mean an increase to our margin of safety by 10%, orange again will mean no change, and bright green will mean that the margin of safety will decrease by 5%. Coming to the first ratios, we'll be looking at the EBIT growth and margin growth. The EBIT has grown steadily over the past years, coming from $2.8 billion in 2016 to over $4.4 billion in 2021. The average growth has been 18% over these years. This means we'll subtract 10% from our margin of safety. The margin growth has also been steadily increasing. The average growth has been 5.13% over the past 5 years. This means we'll subtract 5% from our margin of safety that will be determined at the end of the valuation. The next ratios we'll be looking at are the dividend growth and the payout ratio. The dividend has steadily increased over the past years, going from 12 cents a share yearly to $1.78 a share yearly. The average growth during this time has been 29% of the dividends. This means we'll subtract 10% from our margin of safety. The payout ratio is currently sitting at 20.52%, leaving the rest for retained earnings. Looking at our scale, this means 5% will be subtracted from a margin of safety. The final ratios we're looking at are the debt to equity and the return on invested capital. Currently, the shareholders' equity is sitting at $19.7 billion, while the liabilities are only $7.3 billion. Dividing these gets us the debt to equity ratio, which is sitting at 0.42. Looking at our scale, we can subtract 5% from the margin of safety. Lastly, we'll have the return on invested capital. This is currently sitting at 11.26%, so no change will be made in the margin of safety. Let's go to the valuation models that we'll be using. The first valuation model that we'll be using to determine the value of Tyson Foods is the discounted cash flow model. As you can see, I've implemented the free cash flow from Tyson Foods since 2012. The growth, on average, has been 36.68%. Since we are looking to calculate the lifetime expected growth of the free cash flow of Tyson Foods, I've gone with a conservative 10% of the average, coming in at 3.67%. Implementing this growth, we can look 10 years in the future and then determine our terminal valuation. we'll be using a discount rate of 10% with a perpetual growth rate of 3% in this valuation model. This leaves us with the sum of free cash flow, which is $38.4 billion. We'll be adding the cash and equivalents to this amount and subtracting the total debt that Tyson Foods currently has. This leaves us with the equity value, which is $32.2 billion. The last thing we have to do is divide this by the shares outstanding, and we'll get our discounted cash flow price per share, which comes in at almost $112. With the current price of $61.35, this leaves us with an upside of $50.50, which is 82%. The next model that we'll be using is the dividend discount model. In this model, we'll be using the dividends that Tyson Foods has paid out over the past 5 years, and we'll be calculating a growth rate. The growth rate over these years has been 11.58%. Looking at the growth rate in the future, I've gone with a 75% of the growth rate that has been calculated average, which is 8.69%. The dividend discount price per share comes in at $69.07. With the current price of $61.35, the upside is $7.72. This means we'll get an upside of roughly 12.5%. The last valuation model that we'll be using is the multiple valuation. In this valuation, we'll look at the earnings per share of peers of Tyson Foods that are related to the company and do similar business. We'll be calculating the PE of all of these companies and then get an average out of this. This will be multiplied with the earnings per share of Tyson Foods. Out of this model, we get a fair value of Tyson Foods of $107.11. With the current price, again, at $61.35, this leaves us with an upside of roughly $46, which comes in just under 75% upside. Combining all of the models together, we'll get a total valuation. The discounted cash flow came in at $111.85. The discounted dividend came in at $69.07. And the multiple valuation came out at $107.11. This is an average $96.01. We'll be calculating our margin of safety by combining all of the ratios that we just looked at and subtract them or add them to the standard margin of safety that we have of 30%. Since Tyson Foods has a lot of positive numbers, we'll be subtracting this by 25%. That leaves us with a margin of safety of only 5%. Then we come at our fair value of $91.21. With the current price of $61.35, we get an upside of roughly 49%. Thank you for watching this video. If you have any stock suggestions, please let me know in the comments.